Hello and welcome to Buy, Hold, Sell, brought to you by Livewire Markets. My name's James Marlay. It's great to see you today. And we're going to be talking about what used to be a really hot topic, and that is sustainable growth. But for some reason, in 2022, some of the favourite growth sectors, like healthcare and IT, have been carted out. What we're going to do is find out if there's some sustainable opportunities that could provide some good ideas to pick over for your portfolio. Joined by Shane Fitzgerald from Monash Investors and John Lockton from Wilsons. Shane, I'm going to start it with you. Aussie Broadband, about $1 billion, good revenue growth, not so much on the profit side. Buy, hold or a sell?
Well, I'm going to put a hold on it, but it was tipping over into the sell range, I've got to say. Look, it's had a fantastic run in terms of subscriber growth, but when I look at it, it's all about customer satisfaction is its point of differentiation, and I question the sustainability of that. There's big expectations for growth in the market, consensus forecasts already, multiples pretty high, so yeah, at best it's a hold for us.
John, in the small cap space, these broadband and telcos have been a sensational story for ages. Is it a buy, hold or sell on Aussie Broadband?
No, for us it's a buy. I think some of this momentum can continue over the next 12 to 18 months. It's growing top line, as Shane said, at a pretty decent clip, and we think it can take greater market share than where it is at the moment. Okay, well, we're all on our phones, all in the cloud, zooming around, and the rails for that is NEXTDC. Buy, hold or a sell? Yeah, this is a trickier one. I think this is a hold. Our issue there with NEXTDC is that it just doesn't earn any return on capital. So, huge momentum in terms of its top line and the sector trend and the thematic all ticks the box, but it just doesn't generate a return on capital. And I think there's better ways ultimately to make money than owning a DC. Yeah.
Shane, it's issued a lot of shares, raised a lot of money.
Yep.
But as John says, the profit line's not moving. Buy, hold or a sell?
It's a hold for us as well. Similar reasons. Look, it doesn't make money at the moment because a data centre doesn't start making money until it's got 70% occupancy or higher, right? And they're putting on extra capacity, a lot of extra capacity in the next couple of years. We've done our detailed dive on this and DCF on this, and we get the current share price more or less. So yeah, it's a hold.
A hold, right in the middle. CSL, one of the big darlings of the Australian market. It did just report. People seem to like the outlook statement. Buy, hold or a sell?
It's a buy for us, CSL. If you look at CSL today, it was up 6 or so %, and put it for a quasi-earnings upgrade of that level as well, because they're now including some costs from the acquisition into the guidance. But look, fundamentally, it's a great franchise. I haven't seen anything that rocks my confidence in the franchise of CSL. It's been oversold. We think it's a buy.
Okay, it's a buy for Shane. It is one of the most sustainable growth stocks in the Australian market. Just got a bit expensive for a lot of people. Buy, hold or sell?
Yeah, it's a buy. I agree with Shane in terms of the view that it's been oversold. Caught up a little bit in this high growth because of the multiple, but ultimately this has a very powerful thematic behind it with a multi-year runway, and the acquisition which they made not so long ago ultimately really adds a new layer of growth into the CSL business. So we're a buy at current prices.
Okay. Folks, I've asked both of our guests to bring along a sustainable growth stock that they think looks attractively priced today. John, first cab off the rank, what have you got to pitch us today?
Yeah, ironically, I'm going to pitch James Hardie in the building space, which some people think isn't sustainable because ultimately housing is a cyclical part of the market. But this is really a US story and an underpenetrated part of the market for its core fibre cement products, which sit on the exterior of houses across the US. And somewhat differently to, I guess, Australians, is that they destroy themselves really quickly because of the weather. It's ridiculously cold, and they're taking market share off traditional products. So we think that this stock has at least a couple more years of really good, well above market growth, and for that you're paying a multiple which is broadly in line with the industrials here in Australia. So the stock's been a little bit disappointing recently with a management change, unexpected. Ultimately, the business is more than one person, and we think that the cycle, combined with their own internal ability to generate new products and innovate, will lead you in good state.
Okay. Shane, what's the idea that you want to bring along and share with us about a sustainable growth stock?
Yeah, look, I've dived down into the small cap space because happy hunting around down there. PeopleIN, or People Infrastructure as it used to be known, PPE. It's a labour hire business, but it's the country's leading labour hire player in the health, allied healthcare and nurses, as well as in a technology space. So these are two high growth industries which it is leveraged to. And clearly at the moment with the labour shortages we're seeing around the place, pretty good operating environment for it at the moment. Trades on about 12 times multiple next year, falling to single digit the year after. So this is a company with very solid, high teens, 20% growth rates, and it's not priced for that.
Okay. Well, folks, growth is not the sexiest term going around in the market at the moment. As our two guests have shown us today, there's still some ideas out there worth looking over, and it could be time to find a bargain. I hope you enjoyed the show of Buy, Hold, Sell as much as I did. Remember, we're putting up new videos on the Livewire YouTube channel each week, so make sure you subscribe and give it a like.